I mean, we can.
Yes, sir.
Samaji, we can
is
wait
live.
for 2
Please
minutes.
move ahead.
Sorry.
The session is live. Please move ahead. Thank you. Chirag sir, the session is live. Please take it away.
Okay. Okay, Sharmaji, we can start.
Okay. Good evening, everyone. On behalf of Study Circle and Study Group Committee and Direct Tax Committee of the Chamber of Tax Consultants, and along with Taxman, welcome you all for this insightful webinar on implications of fake invoicing under GST and income tax. At Chamber, our endeavor is to organize seminars, webinars, study circles on contemporary topics. This is one of such webinars organized along with Taxman. We thought members should be aware of menace of fake invoicing so that they can educate their members. You will get a lot of insights from two stalwarts in profession, Sri Vaitishwaran sir, eminent advocate from Chennai, and also Mr. Yogesh Sar, eminent chartered accountant from Mumbai. The session will be moderated by Mr. Mahendra Sanghvi and Mr. Rajiv Nutia. With this, I request our dynamic president, Mr. Haresh Skenia, to say his president's address. Mr. Haresh, please.
Yeah, thank you. Thank you, Sharmaji. Warm welcome to everyone to very important discussion on a topic of the implication of fake invoicing under GST and income tax. Friends, it's given me an immense pride to share that the body today's marks, basically a historical collaboration between the Chamber of Tax Consultants and the Taxmen. For the very first time, these two institutions have united to present this webinar, addressing the pressing and the significant issue of fake invoicing. Friends, this joint initiative stands as a testament to our collective dedications and commitment to the enhancing transparency, understanding, and the ethical practices in our domain. Friends, before we dwell into our panel discussion, I must pause to acknowledge the tireless efforts of the individuals who have been the backbone of this webinar. Ashok Sharmaji leading our study circle meeting, and have been very, very important in orchestrating all these meetings, ensuring the everything from coordination to the case study selection it was completely flawlessly executed. And a note for executive and gratitude to the Direct Tax Committee Chairperson Abhitan Mehta, and whose insight enriched our topic selection, and also the Chintan Wadhwa, basically for streaming our execution process. Their collective dedication has been the cornerstone of today's event, and I extend my heartfelt thanks to them for their invaluable contribution. Friends, we are honored to have with us esteemed personalities who will illuminate our path today. For insight on GST, we have a privilege to welcome Advocate Sri K. Vaithisaranji, and stalwart in this field, and representing the nuances of income tax is CA Yogesh Sar, our renowned partner from Bansi S. Mehta and Company. I would like to acknowledge the individuals who will be guiding our discussion today. Steering our discourse is the proficient chartered accountant, Mr. Rajiv Luthia. His expertise in GST promises to lend a structured flow to our conversation. Alongside him, we have Mr. Mahendra Sanghvi, the founding partner of the Sanghvi and Sanghvi, whose vast experience, insight, and income tax will further enhance the depth of our discussion. Moderators plays an instrumental role in channelizing our thoughts and ensuring a seamless exchange of ideas. And we are truly fortunate to have such distinguished personalities guiding us today. Today's topic dwells into the implication of fake invoicing under both GST and income tax regimes. Fake invoicing is not just a fundamental practice, but a peril that severely impacts businesses, tax collection, and economy as a whole. It is generally employed to minimize tax liabilities, and such false invoicing has been given a rise to significant challenges for the income tax and GST departments. Friends, throughout the history, business have been the pillars of the economic progress and the society wealth. So, however, with the growth, certain bad practices emerges deteriorates the essence of the genuine entrepreneurship. Fake invoicing is a prime example, overshadowing honest businesses. While it might offer quick benefit to a few, its wider effect harms many, shaking the trust we place in our system and urging us all to stay alert. Through this webinar, we aim to unpack the complexity of the issues, shedding the light on the profound consequences, both for those who issue and those who unknowingly receive such invoices. With the combined expertise of our panelists, we will cover the legal repercussions under the both GST and income tax laws, ensuring a comprehensive understanding of the topic. This discussion is not merely academic, but it's a crucial step toward building awareness and fostering ethical business practices. The Chamber of Tax Consultants has always stood firm for ethical business conducts and strive to guide the community through the intricate world of business. Today, hand in hand with the taxmen, we present a panel of esteemed experts to shine a light of the intricate topic of implication of fake invoicing. It is essential for us to remember that the challenge presented by the fake invoicing are not just confined with the walls of GST or income tax. The repercussion will spill over into other significant arenas like the Prevention of Money Laundering Act and even the Indian Penal Code. Now, while we dwell into the implication of fake invoicing today, I would like to take a moment to spotlight the relentless efforts of the Chamber of Tax Consultants. As the Chamber of Tax Consultants, we pride ourselves on being a vibrant hub of advocates, chartered accountants, company secretaries, cost accountants, tax consultants, and students. Chamber established in 1926, and for nearly a century, we have dedicated ourselves to the enrichment of our members' knowledge and skills. Chamber is not just an institution. It's a dynamic community that thrives on learning, sharing, and connecting. The Chamber is proactive in its efforts to enhance the legal profession. It conducts research, shares knowledge, and interacts with the decision makers. It offers professional multiple networking opportunities through events and seminars. The Chamber consistently advocates for its members and taxpayers by making frequent representation to the government and other regulatory bodies. The Chamber makes effective representation through pre- and post-budget memorandum and need-based representation on burning issues and addressing the concerns and potential public hardships. Chamber's journal, which is the mouthpiece, is very popular amongst the professional and corporate as well, mainly because in-depth analysis on the theme-based topical issues. These special issues have been found a permanent place in the libraries of the leading tax professionals. The Chamber also publishes the International Tax Journal, focusing on the growing area of international taxation. The Student Committee organizes various events, including the annual Dastur essay competition, attracting participants from across India. They also host a national tax moot court competition in collaboration with the Government Law College, Mumbai. Our mission has always been to enlighten, empower, and evaluate. We have been tirelessly working towards the dissemination of knowledge, ensuring that professional businessmen and the community at large remain informed, compliant, and poised for success. In conclusion, I urge each one of you to not just listen, but to engage, question, and contribute to this discussion. Let's work collectively to weed out malpractices and create an environment where business can thrive ethically and responsibly. Thank you, and let's embark on this enlightened journey together. Thank you. Over to Sharma ji.
Good evening, friends, again. I have a pleasant task of introducing today's panel speaker. First, Mr. Vaitishwaran, sir. Mr. Vaitishwaran, sir, obtained a law degree from Madras University and enrolled as an advocate in 1990. He also has obtained graduation CWA from the Institute of Cost and Works Accountant and has completed ACS from the Institute of Company Secretary. His legal firm operates with the physical offices at Chennai and Bangalore, provides services virtually across the country. He has more than 32 years of experience in advisory capacity as well as through appearance before income tax authorities, tribunals, and courts in matters arising under domestic and international tax laws, excise, custom, service tax, VAT, CST, GS, FEMA, RERA, company law, and IBC. He wrote the first comprehensive book, VAT in India, when VAT was introduced in 2005, and has also authored book on SENVAT credit, books for students appearing in CA final exam. He has written hundreds of articles covering variety of issues in tax corporate laws, constitutional law, general laws in both print and digital media. He has recently authored the book Taxation of Digital Economy, published by Oak Bridge, covering international tax and indirect tax aspect of digital world. He is considered as a specialist in tax and legal matters with in-depth knowledge of the business and tax laws. He has addressed hundreds of seminars and conferences on law and taxation across the country, and he is the most sought after legal professional in GST and business restructuring matters. He is an expert in real estate contracts and has recently forayed into technology, law, and artificial intelligence. He has been recently appointed as a member of the Advisory Council by the Tamil Nadu government in respect of GST. He advises clients across the country on various verticals such as manufacturing, retail, healthcare, food, etc. Uh, he also advises charitable trusts, societies and clubs, etc. He also advises various association and chamber of commerce. He was the chairman of the expert committee on GST, Madras Chamber of Commerce and Industry. He is the member of the Finance and Taxation Committee of CIS. He is also a member of the SIC Indo-American Chamber of Commerce. He is the recipient of Vocational Excellence Award from Rotary. He is actively involved in various social causes through music and also forays into humor writing. And now the second panel speaker is again an eminent speaker, Mr. Yogesh Thar, currently partner of Mr. Bansi S. Mehta and company leading firm of chartered accountants in Mumbai. He is a fellow member of the Institute of Chartered Accountant. He has a rich blend of experience in domestic and international tax. In his work experience, more than 36 years, he has acquired specialization in the areas of corporate taxation, business merger, acquisition, restructuring, and business valuation. He started his career with Mr. S.V. Gatalia and Company Chartered Accountant, then practiced for nearly a decade as sole proprietor and as a partner in R.S. Kadake and Company. Before joining Bansi S. Mehta and Company. He has, to his credit, authorship of several books and articles on direct tax and double tax avoidance agreement published mainly by the Taxman, the Chamber of Tax Consultants, BCA. Some of his well-known contributions are Tax and Treaty Guide published by the Bombay Chartered Accountant Society and his book on domestic transfer pricing published by CCI. He was a visiting faculty at the Narsi Munji Institute of Management Studies during 92 to 97. He served as joint editor of the Bombay Chartered Accountants Society, the tax referencer in 97 to 2008. Mr. Thar served as various committees of the Bombay Chartered Accountants Society, ITAT Bar Association. Is also member of the Direct Tax Committee of the Chamber of Tax, presently member of the Taxation Committee. Friends, reading this biodata, you will find that both are expert in direct tax, or both panel speakers, direct tax, indirect tax, international tax. Both are genius. Both are most sought speakers. Whenever we request, both of them are readily agreed to share their knowledge. Above all, both are very humble. With this, I present before you Sri Vaitiswaran sir and Mr. Yogesh Thar. Now I request Mr. Chirag Wadhwa to introduce our moderators, Mr. Mahendra Sanghvi and Mr. Rajiv Luthia.
Thank you, sure. Thank you, Sharmaji. It's always a pleasure to be part of the dais wherein you get an opportunity to introduce stalwarts. One thing with respect to sessions is the time constraint. The more important aspect which I have learned across is there are time constraints on two aspects. One is to complete the session on time, and the other is to complete the introduction on time, because all the panelists over here are such stalwarts that, it takes time to introduce them. But selectively, considering their achievements and trying to portray it in front of you all, I'll first introduce Mr. Rajiv Luthia. He is a chartered accountant and qualified in the year 1987 and has been practicing since then. He is also DISA certified, as well as he is a completed LLB from Mumbai University. He specializes in the area of service tax and GST. He has delivered immense seminars as well as discussions for WIRC, DCAS, CTC, AIFTP, GST PM on services on the topics of service tax and GST. He's a contributor update in the monthly newsletter published by WIRC since past 2 decades. He's also the contributor to service tax law update in the monthly journal published by CTC. He has authored various publications for WIRC and BCAs on the topics of service tax and GST. He has been a co-opted member for the Indirect Tax Committee of the Central Council of ICAI. He was also a special invitee and the convener of IDT Committee of GST for ICAI. He was chairman of the Indirect Tax Committee of Chambers of Tax Consultants for the respective years 2009, 2010, and 2015. Also, he is presently an advisor to the Indirect Tax Committee of the Chambers of Tax Consultants. This was my best to cut short the various achievements achieved by Rajiv sir. Moving on to our next panelist, which is Mahendra ji. So Mahendra sir has been a founding partner and the senior partner at Sanghvi and Sanghvi. His professional experience spans over 30 years and his areas of expertise are income tax, litigation, and audits. He has been a past president of the Chamber of Tax Consultants. He is currently the past chairman of Law and Representation Committee of CTC. He was nominated as a member of Regional Direct Tax Advisory Committee by CBTT. He has also been a member of the Standing Committee on TDS from Mumbai region of Commissioner of Income Tax TDS. He was a co-opted member of the Direct Tax Committee of WIRC of ICAS and a member of the Direct Tax Committee of IMC. He has written several papers and regularly delivers lectures on various topics of professional of interest organized by ICAI, chambers, PCAs, and other organizations. He has written various newspaper articles and magazines. And for magazines, he has also been a contributor to the referencer of WIRC. He delivered lectures during training sessions of public sector companies and orientation and training programs of tribunal members. With this, friends, I'll not take much time, and I'll request the panelists and the moderators to continue the session.
Now I'll
Rajiv,
give
sir.
the hello.
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 Yeah, Sharma ji.
Yeah. Now I will request Rajiv to take the proceedings further. Friends, 5 case studies have been made. First, Mr. Rajiv will explain the case study, and Vaitishwaran sir will give the remarks on GST, and then Yogesh will give his views on income tax implications. Mr. Rajiv, please.
Yeah. Thank you, Sharma ji.
Rajiv?
Yeah. I'm there. I'm audible, no, sir?
Yeah.
So, yeah.
Yes, sir.
Yeah. So at the outset, my sincere thanks to the organizer, CTC, as well as Taxman for having given me an opportunity. It's always a pleasure to share a dais with such luminaries, especially Vaitishwaran sir, Yogesh Tharji. Friends, the topic selected is aptly selected at right point of time. And the focus is this topic, the panel discussion. That is very important that you get 360-degree views from both the experts, direct tax front as well as indirect tax front. And for last couple of months, we have seen the approach the department has come across many such actions, especially against the fake invoicing. What we have done is we have made out 5 case studies. And through case studies, we'll try to get the views from both the panelists. And I'm sure the panelists have so much of knowledge and the depth, rather, I mean to say, they would like to cover more than what we have been asking. So any offshoots, etc., During that talk, I'm sure they will be covering. I have been listening to Vaitishwaran sir for years together during our RRC. I know the way he lead the thing. Same is with Yogesh sir. My Mahendra Bhai is experts on the direct tax front. Will be both of us will be jointly handling these sessions. I had a reasonably low knowledge as regarding income tax is concerned. Mahendra Bhai will be taking lead as and when income tax fronts comes. With this, we'll start working on that. Friends, the fake invoicing is concerned. I think that is a bit loose word to speak because there is no such definition in the law, etc. But the first SOP was rolled out by the government CBIC in 2019 on 12th of May as far as GST is concerned. And then within the SOP, what they have stated is the invoice that are usually treated as fake invoice are those where the GST invoice are raised by an entity without actual supply of goods or service or payment of GST. That is what the SOP says, and some few modalities they given. This is very important for the perspective because our case studies have been rotated around this. As far as CBIC is concerned, CBIC stated that in fake invoice generally, basically, the invoices are being misused in following methods or modal. First is invoice are being issued without any supply of goods or service. In second case, issues of invoices are being made by one person and the goods are being sent to other person. So that means goods will go to X and invoice will go to Y. And in third case, there will be invoice will be routed through various fake companies. There will be shell companies, and ultimately there will not be any delivery of goods. These are the three aspects, rather three types through which the fake invoice will be misused. That's what the SOP stated, and thereafter how department has to act with. Going forward, CBIC has issued circular on 6th of July 2022 after about 3 years, circular number 171, giving guidance and clarification how department has to work, and they have given identified 2 or 3 situations that how the things, rather the penal consequences or other consequences which will come across, how department will look into. With this background, the 5 case studies which we have made, I'll be just sharing the case studies, give the brief of the facts also, and thereafter the questions will be asked. First, we'll ask from the GST perspective to Vaitishwaran sir, and thereafter the offshoot questions to Yogesh Tar sir as far as the income tax is concerned. I'll just share, give me a minute. I'll share. Yeah, I think, is it visible? Mahendra Bhai, is it visible?
Yes,
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 yes, we can see it.
Please go ahead.
So I will not read out the things, but I'll try to give a gist.
Summarize it, yeah.
There is a company called C Limited. They are specially dealing in electronic items and computers, laptops, etc. Now it's a small SME. They want to list themselves and go public on a stock exchange. And perhaps they must be feeling, or rather their advisor must have told your turnover is not good enough or attractive. So in order to make your public issue more attractive, your turnover has to go up, at least on paper. And that's what advice they got it. And therefore what they did is, they have done an invoicing transaction without actual delivery. Invoices have come on both the side, purchase and sale side. But only very important part is that invoices are pertaining to iron and steel, which is not at all connected to their business. I have given the breakup of financial year wise, what is their purchase, what is their sale. Good part is only, it is a paper transaction, but the GST thereof has been discharged by C Limited, part of them by ITC to the extent available, rest by the cash. And these all the transactions have been declared in the respective GST return for all the 3 years. So C Limited was honest to that extent only, except the transaction is concerned. Now the question is, it was DGGI in the year financial year 22-23 issued summons, maybe based on whatever information they have, and they have started investigation in this matter, and they have recorded the statement of one of the director A Limited. Those who have faced the DGGI and the way the statement has been recorded, I think Mr. Director, Mr. A has collapsed during the statement and confessed the entire thing, stating that yes, it was a paper transaction merely, but whatever tax was due, I have paid to the extent by using the ITC, etc. So this is a fact of the case. On GST portal, everything is fine. But ground reality is it is a paper transaction of purchase and sale. This is a fact of the case. I hope it's clear with the kind of speed I am having. The issue arises here is the show cause notice was issued by DGGI requiring him to pay entire ITC, which was being claimed for all these 3 years. You can see the amount in the last column, 1,78 lakh odd. On the ground that you have not fulfilled all the conditions laid down in section 16.2. Today we have 6 conditions. One of that, the delivery of goods or service was never received on that ground. Consequently, interest under 50 subclause 3 and the most important penalty under 122(1) subclause 7 for the incorrect or rather a wrong availment of ITC without actual delivery. And the last is there is a one more offshoot question to that is question A, penalty under 122(1) for issuing the bogus bill of supply because there was no delivery of the goods given, but the invoice was issued. With all those problems, C Limited has no choice but to approach Mr. Vaiti sir. So let us, Vaiti sir, your views on this issue, sir.
Thank you, Rajiv. Can you stop sharing so that I can start sharing?
Before you take up with Ishar, I just have one observation to make is that in the chart which Rajiv bhai just shared, the total in the GST on sale and the total on GST on purchase is to be read as 97,20,000 for sales and 95,94,000 for the purchases. And the question A, which is ITC to the tune of rupees 1,78,000 is to be read as 95,94,000.
So totaling error to that extent.
Total error, there's a total error. And the same way the ITC to the tune of 95,94,000 is to be read as. Yeah.
Thank you.
With the sir, it's yours.
Thank you, Mahendra bhai. Except the totaling error, the facts remain the same. I am stopping the sharing part, Vaiti sir.
Sure.
Yeah. Good evening, and thanks to CTC and Taxman for this opportunity. And both organizations are well reputed, both are well known to me. And I've spent many years in many sessions in CTC, and off late also Taxman have made a couple of quite, I've addressed quite a number of webinars recently. Thanks for that case study. But before I just go into that topic, couple of reasons which probably contribute to all these things, like this example talks about circular trading and beefing up the turnover, etc. I think GST is probably an offshoot, or GST consequence is probably an offshoot of a practice that existed for many years. So there were businesses which had their own compulsions for hiking up their turnover, whether it is a bank funding or some other transactions or pre-qualification rights or basically unethical practices which forced them to raise an invoice. All those things had happened. But GST being so transparent and GST being completely driven through the portal, this issue has surfaced in a very, very big manner. And that is why this topic and discussions are at play. So quickly going to my slides, quickly addressing the points that have been raised. So this fact been captured by Rajiv and explained, and we take advantage of the fact that there are errors in the show cause notice. So our first objection will be to the fact that the show cause notice has not been properly written, because there have been arithmetical errors and computation errors, which will definitely take advantage in our reply. Anyway, coming to the point, the fundamental issue is summons by DGGI, statement from a director who has actually confessed the transaction of paper transaction. We don't know what really transpired during the entire discussions. We don't know whether the confession was voluntary. We don't know whether there was some kind of coercion or pressure or whatever it is, but the confession definitely has been taken, and at least there is a statement taken from a director. So I'm going to look at it. Firstly, make it very clear that I'm not endorsing this kind of a menace, nor do I appreciate this kind of a menace that exists in the country, but it is slowly being eradicated. But if something like this has happened and something like events has unfolded in terms of case studies, what are the legal remedies that are available? First of all, as Rajiv put it, is there something called as a fake invoice? That's a popular term used in print as well as media as well as government. But there is no concept like a fake invoice in GST. You have an invoice. and that invoice is called as a tax invoice. And tax invoice should be in a specified format, which requires various items to be required and tax to be paid. So on these facts, it meets all the requirements of a tax invoice. Whatever required under law for a tax invoice has been met, and tax has always also been paid. Fake invoice could probably mean a counterfeit invoice or a replica of an original invoice, like those days of DPP frauds and things like that. But this is not really a fake invoice kind of a transaction. But it is an invoice without an underlying supply is what is the inference from the revenue. And therefore, when there is no supply, then there is at best a violation of section 31, which can attract certain penalties for the purpose of basic procedure violations. Now, the key thing which probably the revenue or the case study 1 revolves around is a statement given by a director. Now, let's look at the statement given. He would have probably been summoned under section 70. And in terms of the summon, a person can be called upon to either give evidence or to produce document or any other thing. This is what section 70 is worded or how it is structured. But if you look at section 70 and compare it with 108 of the Customs Act, which also deals with summons, a gazetted officer of customs shall have the power to summon any person whose attendance he considers necessary either to give evidence or to produce a document or anything in any inquiry. And 108.3 says all persons so summoned shall be bound to state the truth on the subject they are examined or make statements. So 108.3 specifically confers power on a gazetted officer of customs to take a statement. Whereas in section 70, it is confined to just summoning a person. There is no element of statement available in section 70 compared to 108. That's a critical and key difference. Now, if you go back in terms of even 108 of the Customs Act and its earlier avatar under the Sea Customs Act, the Supreme Court in Ambalal versus Union of India made some key observations. It said that, have you given a copy of the statement to that person from whom he was taken, or was he allowed to inspect the same? In case the customs authorities want to rely upon a statement, they should be given an opportunity to inspect and supply a copy thereof. And therefore, they said your burden of proof has not been discharged. Now, section 70, when somebody gives a summons, or the authority gives a summons and the director comes for the summons and appears and gives a statement. When the section does not confer the power to take a statement, any statement given, will it be valid or can it be relied upon? That becomes a very, very legal question, which probably will have to be tested. Now, let us assume it's a sworn statement. Now, if it's a sworn statement, the authority collecting that statement does not have any power to take a sworn statement. A sworn statement is taken only by persons who are conferred with such powers. So Yogesh will talk about in the context of income tax. But basically, if you look at the difference between survey and search, and of a statement given during survey has got much, much less evidentiary value compared to a statement given under search. Therefore, if it is a case of survey and the statement itself is not considered that much of a great evidence, what will be the credence of a document or credence of a statement given by a director pursuant to a summon when the section does not even authorize taking of such statements? Then you look at the Evidence Act and you look at 136 of the CGST Act. 136 of the CGST Act says a statement pursuant to a summons under section 70 will be relevant in the context of prosecution of an offense in two scenarios. One, when the person who made the statement is dead or cannot be found or kept out of the way, or the person is examined as a witness and the court feels that it should be admitted. So the relevancy of the statement is also dictated in the law. The law states that, yes, a statement under section 70 will be taken on record for the purpose of prosecution in two scenarios: when the person who gave is dead or he cannot be found, etc. Which means the statement is never referred to as part of an assessment or relevant as evidence for the purpose of assessment or adjudication. Only in the context of a prosecution, and that too when the person is missing or dead, you can use a statement. Otherwise, you cannot use that statement, is what the purport of 136 is. And we can always go back to Article 23 of the Constitution. No person shall be compelled to be witnessed against himself. So in this case, when the director gave a statement, he could have probably been accused of an offense during the summons, and therefore he can never be witness to himself. There are enough decisions on that in the context of Article 23. And there are observations of the High Court saying that you can only use the statements for corroborating evidence, but you have to establish before the authorities that what happened and what did not happen. So the question that boils down to is whether that 95 lakhs was correctly availed or not. Tax invoice issued, payment made to vendor, 16.2 says receipt. So have I received the goods will be a critical question which will have to be answered. Now, the entire show cause notice, if it is based on the statement, it may not be enough. The show cause notice has to go beyond the statement and then demonstrate that 16.2 conditions was not satisfied. And 16.2 conditions is also very peculiar because what is receipt? Receipt can also happen by without actual physical handling of the goods. I may transfer title and that also ownership can happen. I can do a high C sale, ownership can transfer. I can do an inbound transfer, ownership can happen. Ownership can move. So when ownership can move from A to B by various modes of transaction without involving a physical handling or delivery of the goods, what is meant by receipt? And that takes me to the fact that receipt is not defined in the CGST Act. Though there are definitions of address of delivery and document, etc., receipt is a key word that is not defined. So even if you refer to delivery, you can only borrow from the Sale of Goods Act. And Sale of Goods Act is now very, very clear that it can also be constructive possession and need not be physical possession. So constructive possession or recognition of ownership, recognition of title, the very fact that you paid for it could also be evidence and to argue that I have complied with the conditions as far as 16.2 is concerned. So as far as case study 1 is concerned, while the statement is the one which is going to be the focus for the department to take action, if you are able to dislodge that statement and if you are able to say that the statement alone cannot be the basis, then you have some kind of case to argue. And one other point you can always take is whether the DGGI has the power to issue a show cause notice. That is a bigger topic by itself. I'm not getting into it at this point of time.
Hello. Hello.
Yes, I can hear you.
Yeah. So Vaiti sir, if I have to summarize what your views are, what is more important in the show cause notice for recovery, they have to establish and rather allege first that it was only on section 62 violation that delivery of goods have not been received. The statement, only on statement, it may be on a weaker footing for the department going forward, perhaps. That is what. Fine, we take that. First, we'll try to complete indirect taxes and then we'll go on the direct tax part. Interest, we are not discussing consequential, but the penalty is concerned. Now, the first is establishing the demand. If you see what I've written in the allegation is concerned that the department is trying to recover ITC only to the tune of whatever amount and in violation of 16.2. So I believe to that extent, the allegation in the ITC is correct. Maybe what is the preface and background thereof, we understood what you are trying to say. And now in this situation, when director having stated, maybe under pressure or whatever reason, once it and he has not retracted the statement till to date. Okay, and assume that reasonable time have passed on that. Can you say that it was given? Hello. Can we say that the statement was recorded under the coercion, fraud, etc., and when you have actually confessed the thing, how you are eligible for the ITC we have not received, and thereby there is no case against for the assessee to argue?
See, that is where normally when you give a statement before an authority and assuming there is an element of coercion or undue influence, retraction becomes important and the timing of the retraction also becomes important. Correct. So in this case, I'm based on the silence in the facts, I'm presuming that retraction was not done. Yeah. But let us say retraction is not done, then you fall back on the fact that whether what was taken can be relied upon in evidence.
Okay. Okay.
So if you can demonstrate that what was taken as a statement cannot be relied on as evidence, then it becomes the onus shifts, the burden of proof and the onus changes, and the onus shifts the department to demonstrate why you're in violation of ITC.
Okay. Now, Vaiti sir, one more thing, that entire transaction is a paper transaction. Department is only asking for ITC fine. Can we take a stand that fine, okay, on the front of ITC, we could not comply with 16.2. But on the other end, when there is no purchase, there cannot be any sale. So on my output side also, there is no liability in any case because supply cannot happen when it is established. And I also agree, plus department also says that there was no supply. To that extent, then what is the default? Because output liability also to that extent is zero, and ITC claim if you are rejecting it's fine. Don't allow me ITC, but there is no output liability. And so consequently, there is no interest to that extent. On penalty, we'll take little later, but on this ground, can we argue when there is no allegation in the show cause? They don't want to allege anything on the output side because I already discharged that, although partly by filing return in cash and partly by kind also, or by ITC.
See, I'll take it to a different dimension. Now, when you're talking about purchases from a vendor,
yeah,
and that ITC is being questioned in your hands,
yeah,
what happened to the tax paid at the vendor end?
Yeah.
So assuming it's a paper transaction, then, and which means that there is no supply.
Correct.
And government also recognizes that there is no supply.
Correct.
What basis does the government have or the authorities have to retain the tax collected from the vendor and also ask for reversal of ITC?
Correct.
Which
Correct.
means on a supply which doesn't exist, are you
Correct.
collecting twice?
Yes. Correct. Correct.
So that can also be a difference.
Correct. Fine. Fine. Okay. Interest, as regarding the penal consequences, both the sections which were invoked in the show cause, perhaps one is for the incorrect claim or rather of ITC on fake invoice, and second is 122(1)(2) on the issuance of the fake bill on the output side. Now, sir, in this SCN specifically, there is nothing to be recovered as a liability on output side. And still they are asking us to pay penalty under 122(1)(2) for a fake invoice. So within SCN, there is a contradiction. On one end, they are asking for penalty, and other side, they never say that there was no supply. Directly, they are not saying to that extent. So can we say that there cannot be a penalty on 122(1)(2) subclause or any ground to come out of this penalty of 122(1)(2), because you are not trying to recover. You are very happy once output side you got a tax partly by ITC, partly by cash.
See, once you cannot approbate and reprobate. The fact that you have got your tax liability paid through ITC and cash.
Yeah.
So to the extent of the cash being collected, as well as, let us assume that the ITC is under dispute, but the cash element being collected as GST is something that came from his pocket.
Correct.
So having collected GST on the transaction and recognizing that GST was paid on an invoice, which now they later on say that it is not a valid invoice. Are you justified in then saying that it is not a valid invoice, therefore penalty will be levied on it? So then logical way of proceeding would be is, you have not proved that you have not passed on, I'll give you a refund of this tax. And then I'll also impose penalty for a fake invoice or so-called alleged invoice.
Oh, correct. Okay. Thank you very much. On the direct tax front, Mahendra Bhai, what all I have noted down. Thereafter, you can make addition. So, Yogesh sir, for you, since this was all the ITC related transaction pertaining to financial year 17, 18, 18, 19 and 19, 20, which GST department through show cause started action in 22, 23. And perhaps they may share the information to income tax or income tax may ask and get the information. The question comes is implication under income tax. What about 148 notice? That is one thing. And specifically the number of years which have been passed. 22, 20, it is 23, 24 we are into. And secondly, there are no any other proceedings pending against this company. That is one part. And secondly, the amendment which was carried out by levying, rather introducing penalty 271(8)(d) in the income tax 2 years back. So how the income tax department and what will be the course of action, rather, that is what, throw light on that, sir.
Yeah, before that, just if you, Rajiv Bhai, let me just few more
Please.
of them. Is
Please.
like as Vetishwaran sir said, and he talked about the legal enforceability of the statement, whether the statement record, what is the status of the legal enforceability. And here we understand that the investigation team has issued the summons to the director of C Limited, and the summons is recorded under section 131 further to what the statement has been recorded under the GST law. And thereafter, the other issues, if I will request Yogesh to cover up, is regarding the net profit on this transaction is rupees 7 lakhs for all the aggregate 3 years. Now, on this, accordingly, the company has paid income tax. So whether the income tax is happy and satisfied with tax on, I would say, artificial income of rupees 7 lakhs, which is already received, or other consequences will follow, like as Raju bhai said, the reassessment notice can be issued for all the 3 years, including the first year, that is assessment year 2018-19, wherein the sales consideration, including the GST, is below 50 lakhs. However, if you put the sales and the purchase, including the GST, it will cross 50 lakhs, which will come to 92 lakhs. If yes, then during the assessment, can AO treat purchases and sales separately and accordingly apply specified sections, that is section 69C and 68, and levy higher tax rate at the rate of under section 115 BBE? And further, for the penal provisions, whether the penalty under section 271(1)(c) for the concealment of income, for thereafter 270 capital A for the underreporting of income, and as Raju bhai said, false entry found under section 271 AAD can be invoked and levied. Further, whether the consent to whom sales is made will also have consequential impact, and a penalty can be initiated for 271 AAD also to those companies where the purchases have been made from C Limited. With this, I would request Yogesh bhai to kindly enlighten your views on this.
Yeah, okay. First of all, thank you, Rajuji. Thank you, Mahendra bhai. Thank you to CTC and Taxman for inviting me to share my views on and share the dais with Mr. Vaiti Saran, for whom I have the highest regards. Haresh bhai referred to us as expert. I am certainly not an expert, and certainly not an expert so far as fake invoices are concerned. Let me really clarify that I may not be the best of tax practitioners to talk on a subject like this, and I would not like to legitimize what is otherwise illegitimate. And certainly not like to clarify that in case there are issues, in case there are problems faced by genuine people, then one will have to find a way out to bail them out from with genuine difficulties. So with that view in mind, we can go ahead and proceed on this particular matter. So on the first issue, so far as which is raised by Mr. Vaiti Saran and also by Mahendra bhai, as he pointed out, that so far as the income tax law is concerned, you have section 131, and under 131 there is a power which is same as the power vested in the court. The Act specifically gives power for examining a person on oath. And I believe, therefore, that questions will be raised and he will be asked to answer it on oath. And if on oath he has, Mr. A as a director has said something, then it will have an evidentiary value. So merely on the statements taken by the GST department, or whatever material they have forwarded to the tax department would not be sufficient. The tax department itself will have to invoke section 131 and take these statements. And we presume that even under that statement, Mr. A has said that yes, these are fake invoices or bogus invoices, or these are paper transactions. Now, that is one aspect of it. Now, when it comes to the transaction which is done, which is really speaking an innocent looking transaction, that look, I have not defrauded any revenue here. All that I have done is I have raised invoices. A has raised invoice on B, B has raised invoice on C, C has once again raised invoice on A. So, so I have done this sort of a circuitous transaction, debts, and everyone has inflated their P&L account to show a bigger picture. So at worst, at best, it is a fraud on the public at large, so as to show a higher invoice, higher P&L account, and therefore be eligible for getting listed. So in that sense, these are all issues which are against public policy. Now let's come to the specifics under the Income Tax Act here. That this is done. There is no allegation. See, in a fake invoice cases, there would be, what is understood commonly is that I have raised an invoice, somebody has made payment to me, and I have given cash under the table. Okay, this is the common understanding of a fake invoice. Now here there is nothing of that sort. Okay, each one has accommodated each other and everyone has inflated the P&L account. Matter is over. So if that is so, then the question is whether all these provisions relating to fake invoices, whether your 271 AAD at all would apply here. Now, if it applies in cases like this, then it would apply in all cases of speculative transactions, because all speculative transactions are settled otherwise than by way of delivery. So if there is an invoice which is settled by making payment to somebody else, because A has sold goods to B, so B should have paid A, B pays A, and in turn that payment has from A, it has gone to Mr. C. So the settlement which is made otherwise than by way of delivery is by definition under the Income Tax Act, that settlement of a transaction is regarded as speculative transaction. So then in all cases of speculative transaction, these fake invoices provision in 271 AAD would come into picture. So one will have to draw a line, one will have to get into the purposive interpretation as to why it has been introduced in the Act in 2020. Yes, I mean, say that, yeah, these are earlier years, but I may say that so far as penalty provisions are concerned, one will have to look at whether the law is prevailing when the offense is committed. Okay. Now, if you have been issued, rightly, wrongly, if you have been issued a 148 notice, and in that 148 notice you have not disclosed for whatever reason, that these are fake invoices, then, because by definition it falls under fake invoices. So in 148 you are not disclosed. Then technically, even for earlier years, this penalty will come in, because the department's allegation would be that you had, all right, this is for an earlier year, 17, 18, 18, 19. But today under 148, you have filed a return in which you have not said that this is a fake invoice. And therefore you are committing an offense today. Technically, they may be right in invoking this penalty even today for earlier years, because as per the law, the penalty provisions will apply on the date on which the penalty provisions, if they are in existence, on the date on which the offense is committed, then those provisions will apply. So today these provisions are there on the statute. You mind well, if you look at the explanatory memorandum of 2020, that explanatory memorandum doesn't say that it will apply to assessment year 2020 and thereafter, 2021 and thereafter. It doesn't say that. It says that it applies with effect from 1st April 2020. Whereas in all other cases, wherever an amendment is brought with effect, say that this provision applies for assessment year 2020 and thereafter, 2021 and thereafter. Here it doesn't say so. It says that it applies from 1/4/2020. So offense is committed after that date. All right. But having said so, that's only the legal part of it. Having said so, I would feel that where there is a paper transaction which is not, there is nobody's allegation that any cash has gone under the table to the person who has taken these invoices. So if there is no such allegation at all, it is only for a so-called for the purpose of window dressing my accounts. Okay, SEBI will have issues with them. Everybody will have issues with them. But the revenue, the tax department, to my mind, in a transaction like this, cannot legitimately have any issue on this, and much less the issue of leaving penalty. One will have, yes, as per the plain language of 271 AAD. There is a problem. I'm not saying that there is no problem. As per the plain language, there's a problem, but one will have to get into a purposive interpretation that, this sort of things are not intended to be really covered. Now, having said that, I can possibly end my answer to question number 1 here, or maybe I can go on for another half an hour, because if we have to deal with this, whether and to what extent section 68, 69, etc. becomes applicable, whether and to what extent your section 115 BBE, which talks about tax at the rate of 60%, would be applicable. I think
Yogesh bhai, I agree with you. Looking at your expert knowledge, you can definitely carry on for it. But this withholding of your answer would be very short. We may have to consider and give you an answer for the another case study, that is 2 and 3. So there also we will be covering if you're not covering now.
Yeah.
So
yeah.
Fine. It's fine if you want to withhold it for a while.
Yeah, fine. We'll deal with it when we deal with the other issues on 68, 69, etc. Let's go ahead with the second one.
Okay, so just to summarize what Yogesh bhai is trying to say is that first of all, that if the statement is again recorded after the income tax investigation brings issues a notice under or a summons under 131, then it will definitely have an evidentiary value and it would be accordingly dealt with. The very good thing, one suggestion, or rather one outcome of this is that since it is otherwise than by a delivery of the goods, this would be held or can be held as a speculative transaction. And if it's a speculative transaction, the life would become a little more simpler, because then the purchases and sales would not be required to be taken separately. Therefore, the question of maybe 69C and then 68 and all those issues to that, looking at the higher value, would not come into the picture. As far as the penalty is concerned, Yogesh bhai's view is that it is from the date of committing an offense. So I don't know whether can a person, if he's issued a notice under 148 and the SSE has an option 1 that he files a return under section 148, or at times even he says that the return filed earlier under 139.1 or 139.4 on so and so date may be considered as return filed under 148. In that case, possibly, Yogesh bhai, would the view change that since, yes, I have filed under 139.1, which was prior to 1420, that is applicability of the provisions of 271 AAD, apply, and if I am I'm filing the return under 148, then the answer would be different, or the levy of penalty would be different. Yogesh bhai?
Yeah, no, you are mandated to file a return under 148 anyway today. Earlier, we were just writing the letters and giving it. Now it is not possible. You will have to upload that. Maybe you may upload the same return, but you will have to do that exercise today. So once you do that exercise, then you are technically committing offense today, because you are concealing something in that return. And therefore, if the department stand is that this is an offense, then they can legitimately levy, apart from all your 271 1C, which was applicable till 1617, 270 capital A, which is applicable thereafter. They can levy 271 AAD also. Levy in the sense that will be their stand ultimately. And as a point of law, can they initiate or can they levy? Answer is yes, because you are committing offense today. But if I'm right in taking a view that there is no offense in this, the question does not arise.
Okay, does it make any difference regarding the provisions of section 273 capital B, wherein it says that the wordings of which is prevented by reasonable cause? So the section 271 AID is missing for 273B. Would that?
So reason. So you see, if there cannot be a reasonable cause for hiding undisclosed income. Okay. So if there's an undisclosed income, there's an undisclosed income. There cannot be any reasonable cause for hiding it. And therefore, I think they are right in not including that section in 273B, saying that there is a reasonable cause and therefore no penalty can be levied. All right. Therefore, if any of these 68, 69, etc. additions, rightly or wrongly, are sustained, then it will be very difficult to come out and say that no penalty cannot be levied.
Then Yogesh bhai, maybe later on, again, I will touch upon this issue of this section, whether it is reasonable cause or not, wherein genuinely an SSE is prevented. So we will take up in the subsequent questions. I think, we will end up here with question number, with case study 1. And Rajiv bhai, let us start with case study 2.
Thank you.
And as far as the questions are concerned from the participants, we will just check on that. But we will like to take it at the end. First, let us finalize with the question of what has been raised right now. Okay.
Because many of the other case studies will cover the questions which participants have put in Q&A. That's why I'm holding it back, sir. Now, going to the facts of second case now. In the second case, typically the transaction is there is a company who is manufacturing bar, coils, iron wire, etc. And for that, they have a foundry, they purchase a scrap, melt it, and finished product has been produced. The rates have shoot up for iron, and one of the vendor, who is a scrap dealer, has offered to sell the scrap at a much lower price as compared to the market price for whatever reason. And A was tempted to buy. So he has purchased, received the goods, e-way bill, invoice, everything. And material has also come from that. The final product was also produced. I'm not sharing my screen, but I think the facts can be understood when I'm spelling it out. So the transaction is concerned, goods have really come. Now what has happened, even invoice has come, everything written, everything is filed. So there is no violation. Over a period, the investigation was carried out on the vendor, who is Mr. Khan. And what has happened is he has procured the goods from various other small vendors who are either not registered or raise the invoice without making payment. So the ITC which Mr. Khan has availed on those purchases turn out to be incorrect, bogus, or maybe in violation of section 16(2). So since the amount is more than 5 crore rupees, the department has put him behind the bar, and nothing could be recovered from Khan. Now, actually speaking, Khan is a supplier of A Limited. The problem, the question here is about the difficulty which A Limited is facing, who has purchased from Khan on proper invoice and everything. It is a Khan who has not made the payment of tax correctly, maybe utilizing wrong ITC, and department has suffered. So department says to Mr. A, look, we are also intending to reject your claim of ITC, which is more than 5 crore. In this example, it is 6.19 crore. Saying that you are not complied with the section 16(2) condition. Actually speaking, in my view, there is no question of not complying 16(2) because all the conditions which are laid down in 16(2) by and large is complied. My vendor Khan has already paid the tax for which I have claimed the ITC and disclosed in the return. However, his ITC was incorrect. That is very important. Consequently, those interest and the penalty and the imprisonment, because it is more than 5 crore. We all know how department approaches when the amounts are running in 5 crore plus, etc. So this is what Vaiti sir, where we want your inputs. I hope the question and the facts are clear.
Yeah, absolutely clear. Let me quickly run to this point. Yeah. First of all, this is a much better case study than case study 1. Yeah. The first one is a matter of something which, as Yogesh rightly put it, it is not something you look forward to in a typically handling matter, but it's a question that needs to be answered, and therefore answers were given. But the second case study is a little more genuine, I would say, because here you have a manufacturer who manufactures products. Those products exist. He's got a foundry which is also existing. He's also procuring raw material. Melting is a fact. He has received all documents, even e-way bills, all those things have all been established. His vendor is a scrap dealer who had supplied iron and steel, and the material has been processed, which is again matter of evidence, and then sold with tax invoices along with GST. And ITC was availed on the material which Mr. Khan sold. And of course, DGGI on investigation, they found that Khan's ITC was suspect, and therefore they took some action. And Khan confesses that he had procured goods from various small dealers who have not charged GST. Now, here again, he's not talking about a paper transaction. He's not talking about a transaction which does not involve a supply. He talks about procurement from vendors who may not have discharged GST, or who may have charged GST but not paid to the government. And he suffers whatever consequences, physical consequences, fiscal consequences, all consequences are faced by Khan. And then the department finds that they cannot recover any amount from Khan on the ITC wrongly claim, and therefore they move to the next fellow in the chain, and they come to A Limited, where they say that you have availed ITC, why not we take action against you, because 16(2) is violated, interest penalty, etc., and show cause under 74. So the fact of the matter is, goods have been purchased and received and used in manufacture of goods. Now you're a foundry. If you're a foundry, you will have significant credible evidence to demonstrate that there is melting, there is an activity of material being procured, there is power consumption, there is data which shows in terms of your employees, the fact that goods have been sold, delivery documents to show that goods have been sold, delivery documents to show that goods have been purchased. So there is significant trail to demonstrate that you have received goods, used them, made products and sold those products and paid GST. So the output cannot come in vacuum. The output has necessarily come from inputs which have been used. And your vendor has been prosecuted for whatever mistake has happened. Now, if the vendor is not able to pay up the demand raised by the department in the proceedings, can the demand shift to the recipient, or can the demand shift to A Limited is the key question. I think we should look at GST as it is envisaged as a tax on each transaction. GST is a levy on each supply. You have to look at the law qua each supply. So if you're looking at the scrap dealer to Khan, then there are issues with scrap dealers. You may have to take action against scrap dealers. Then with reference to Khan to A Limited, all conditions have been met, tax has been paid to the government account, etc. So you have to look at, when you come to A Limited, you have to look at only 16(2), as Rajiv said. So have I met the conditions of 16(2)? Yes, I've met those conditions. My vendor has paid the tax, but my vendor has paid the tax using ITC as well as cash, whatever is available. And his ITC is suspected for some reason, or ITC is questioned because vendor's vendor has not paid the tax to the government. Now, is that a basis for questioning my ITC under 16(2)? The answer is a vehement no. You can't keep on, questioning the ITC based on the fact that your sub-supplier had some difficulties or your third supplier had some difficulties, etc. So 16(2) says you must discharge certain burden. So have you discharged the burden? Mr. Khan has paid taxes using ITC. Khan at the relevant point of time was identified as a vendor with a valid GST number in the portal, and department has not proceeded to cancel Mr. Khan's registration. Assuming the department has taken some action and cancelled Mr. Khan's registration, then the A Limited may not have bought from Khan at all. He would have checked the portal and found that Khan was a genuine vendor, and there is no communication to the public at large that Mr. Khan's ITC is questionable. So burden of proof and onus of proof is something which is very, very critical, which can oscillate it like a pendulum. So there is an essential difference between burden of proof as a matter of law and pleading, and the matter of producing evidence. So burden of proof is upon the party who invites a decision. This is constant and will never move. But the onus of proof will always shift from time to time, having regard to the evidence given by one party. So shifting of onus is a continuous process in the evaluation of evidence. So here, tax invoice has been received, goods have been received, payment made to the vendor, and therefore the burden of proof as well as onus of proof has been discharged by A Limited as far as supply is concerned. Once a said item is discharged, then the onus shifts to the department to prove otherwise. There are enough case laws on what is the distinction in burden of proof and onus of proof, which I've given you, Raghavama versus Chenchamma. And there's an interesting judgment of the Commissioner Appeals, though how much of precedent value it can have is interesting. While dismissing a appeal filed with the revenue, they said in the case of a doubt regarding any invoice issued by the supplier, the revenue auto acted upon the same and out of cancel the registration, provide a public notice informing genuine buyers regarding fraudulent actions of such supplier. Since the department has not done any of this, it cannot shift the onus to the bona fide assessees transacting with such parties. So it's directly on fact, and I'm sure if there's no appeal filed against, it's a valid decision as a precedent. Now, the whole thing hinges upon Mr. Khan's affidavit. So whether Khan's affidavit alone is enough to take action against A Limited, A can always ask for cross-examination of Khan. When default in ITC availment, Khan can cast a shadow on ITC available by A Limited, the answer is no. And given the fact that proceedings have been launched for recovery of ITC from Mr. Khan, whether further proceedings can be initiated against A Limited, again, the answer is no. It is not like, you have taxes due from Mr. Khan. You are trying to take all action against him to recover the taxes. He is not able to pay the taxes, and therefore you go to the buyer. See, let's look at a case where a company is in default. And the company has got certain tax dues, and let's take a private company in liquidation. And the private company goes into liquidation, and under 179 of the income tax, you take some action, or under the VAT Act, you take some action for recovery of taxes. So even in the context of taxes due from the company, you proceed against the director only when there is misfeasance or gross neglect or breach of duty and things like that. So there is evidence to be adduced before you can shift that responsibility to pay the taxes to even the directors. So when that being the case, if Mr. Khan's liability could not be recovered from Khan, can you then say that I'll proceed to the buyer and try to collect it from the buyer? Because that is not how the law works. The law is qua each supply. So as far as A supply is concerned, he has paid the tax. Mere non-recovery of taxes or inability to recover taxes from one assessee cannot justify action against the next assessee in the chain. In fact, that would make a mockery of the entire concept of forward charge and reverse charge. Forward charge is a concept where somebody who's a supplier pays the tax and only he can be liable to pay the tax. You cannot collect the tax from anybody. Reverse charge is a situation where the law itself says that the recipient has to pay the tax, or the person identified has to pay the tax, and nobody else can be called upon to pay the tax. So when the law itself clearly identifies these two goalposts for collection of tax and levy of taxes, you cannot try that and then come to the next level, saying that I've exhausted that, I'm not able to recover that, and therefore I'm trying to come to the next level. That is not permissible under law. And as far as affidavits, yes, you can use them as a proof, but then you can always counter those affidavits. And mere filing affidavit is not enough. It's a series of precedents that are available. Affidavit cannot be rejected outright without cross-examination. And when there is an affidavit which is filed by Khan, you can file a counter affidavit and explain the fact as far as your position is concerned. And A Limited can argue that their position is absolutely right. And key thing is here is how do you cross-examine Mr. Khan? And also the key thing is how much of credence you can give to a statement day for action when that proceedings have not really concluded, because only prosecution was launched. If you look at the facts pattern as far as case study 1 is concerned, prosecution launched even before conclusion of proceedings. There is no fact indication of either a show cause notice under 73 or a 74 against Mr. Khan, or a demand under section 74, or an appeal being dismissed under filed by Mr. Khan, or the order being filed and then prosecution being launched. So prosecution was separately launched for the proceeding, which is permissible under law, but that by itself cannot completely alter the transaction as far as Mr. Khan is concerned. For all you know, Mr. Khan could win his case on merits in the subsequent proceedings or a subsequent litigation. Therefore, as far as A Limited is concerned, in my view, it is a much better case than case study 1. In case study 1, it was some kind of a delivery issue where goods did not exist, and therefore you had to rely upon certain technical aspects. But as far as case study 2 is concerned, the merits are much stronger, because the fact of the matter is the goods have been delivered and have been used. And you have this judgment of the Supreme Court in the case of Girulal Balchand, was a state of Haryana. No liability can be fastened on the purchasing dealer on account of non-payment of tax by the selling registered dealer, unless it is fraudulent collusion or connivance with the selling dealer or its predecessors. So the facts itself speak for himself. There is no collusion or fraud in this case. It's a genuine transaction of usage, and therefore you can rely upon this decision to say that you cannot proceed against the buyer. I'm not going into the circular because they've already talked about by Rajiv in the initial preface. So these are my views on case 32.
Vaiti sir, very elaborate thing. Only one or two this thing. First is during your talk, you said unlike in income tax, we have 269 SS and all, where department can ask source of source for this thing. Such concept perhaps in GST, the ITC of my vendor cannot be questioned to me. That is what you are trying to say. I need to comply with what all condition is laid down in section 16.2 for availing the ITC 16.1, 16.2, which is very important. Secondly, although the amount which is proposed to be recovered on account of ITC is more than 5 crore in this example, the normal threat which we get from department to put us behind bar above 5 crore. Here there is first of all liabilities not crystallized, the statement affidavit is not enough. You can take cross examination, and I believe you are trying to say that this is not a demand; it is only allegation as on today. So there is no question of imprisonment until the finality of the order is achieved in any case. And according to you, it's we are at a better footing because Mr. A was compliant to that extent, and he has done everything fine. Fine. By and large, we are okay with it. As regarding income tax, Mahendra Bhai, but before you ask to anything, I personally feel as such in this transaction, there is no violation on the part of A Limited as regarding income tax because his purchases, bills, material, everything is correct. It's only the ITC related issue and above 5 crore jail, etc. Those we have discussed. But only thing what has happened is the statements which have been given and all proceeding which happens during this process in GST. Sometimes you write 6, they read 9. The department other way around. So what are the precautions normally one should take while handling this at GST so that there will be less, I'll not say harassment, but the consequence at the income tax front? This is only one issue from my side. Mahendra Bhai, if you have any more, you can ask to Yogesh sir.
Just to complete the answer, I didn't complete it fully because I went to the circular. See, this issue is all, we all talk about GST, we all talk about as if this is a new menace. And GST has thrown this menace. I would only say GST has thrown light into this problem which existed even before. World over, even in VAT law, you call it as carousel trading. Across Europe, you have this problem called as carousel trading, where just like how you have a trade fair, where all these animals keep on moving around, you have trading between different countries, and ultimately somebody gets a refund. So even under the sales tax law, there have been issues like this. In the earlier days when single point tax was there, when first single point was taxed and the subsequent sale was all exempted, you had invoices which showed all these things. And therefore, there are enough case laws even in the past itself up to Supreme Court level, where they talk about a purchasing dealer is entitled to rely upon certificate of registration of selling dealer and to act upon it. So you may retrospectively cancel it. That does not affect the purchaser's right, or that does not affect the purchaser's ITC. And even in GST, you have this latest Calcutta High Court judgment in the case of Suncraft, where they said that action against a supplier is essential before seeking reversal from the appellant, and you cannot, arbitrarily move against the supplier. And of course, even for items of ITC not appearing in GSTR 2A, you have the latest judgment of the Kerala High Court, where you can also prove your genuineness of the claims, etc. But of course, in all these cases, it was there in the claim. But as Rajiv rightly said, the concept of source of source, and whether he has source, etc., is alien to GST, because each transaction is a supply. Each has to be perceived at each level, and therefore you do not have that kind of a concept. You cannot extend that kind of a concept.
Yeah, before Mahendra Bhai and Yogesh sir take over, there are 1 or 2 questions from participants which are related. So I would like to touch upon those since Vaiti sir is there. This is connecting both first and case study. One question from participant Neetu Gupta saying that in the earlier case study, when there was a paper transaction and ITC was utilized for discharging the output liability by the person, partly by ITC, and the invoice was incurred, but partly it was by cash. During discussion, we stated that there was no supply, so there cannot be liability, but still it is partly paid by cash, where department cannot retain, the government cannot retain the money which was not due to it. The question here is, if noticee takes a plea that in absence of supply, there cannot be output tax, and whatever I have paid by cash, I should be allowed as refund. The question here is within how much time I should apply for the refund claim, whether it will be given, because I myself has declared this liability in my return, and now myself is claiming the refund to the extent of this. So that is what the clarification is.
Yeah, that's a good question from Neetu. But first of all, merely because I am saying that something is taxable and I have paid tax on it, it does not give the right to the authorities to retain it, because Article 265 is quite clear. Tax can be levied and collected only with the authority of law. Therefore, if there is no supply and the entire basis for the payment of taxes collapses, and if both of us are on the same page, the department and the assessee, to say that this is not even a supply, then when there is no supply, there is no question of payment of tax. Any payment of tax is under mistake of law. So once it's a mistake of law, there is no question of time limit. I can apply for refund because this is not something which the tax department also can retain.
So you mean to say section 54, which laid down as 2 years time limit, will not be applicable since
not
the
apply.
amount is not due?
Will not.
Okay. Okay. And one more thing, sir, this is more related to administration. If you want, you can reply. What is the basis of sharing information between GST and income tax? I think this is beyond the law. How between these two departments they'll be sharing? If you want, you reply. Otherwise, we'll skip on this.
They're all cousins. They meet during family dinner and share information.
Fine. The last one, in case of a service provider did not pay the tax to save the liability, and they give statement that they have not provided the service, which result into detail of ITC, what care we need. I think that is already being covered. Sorry. Thank you very much. Mahendra bhai, you can take it for with Yogesh.
Okay. Yogesh bhai, for question number 2. First of all, we are fortunate that we have to examine the case of A Limited and not Mr. Khan. Had it would have been Mr. Khan, the consequences would have been a little different. Here in the example of this case study, A Limited has made purchases from Khan, and during the GST proceeding, the statement on oath has been taken, and which is founding to be very favorable, that he has collected GST and has deposited the same after taking the input tax credit. Now, as far as A Limited is concerned, the purchase party statement is recorded. Purchase party cannot be produced before the AO since he is in jail or it is beyond the control of A Limited. Whether that would have any consequence at the time of assessment, that if the summons is issued to Khan and the Khan is not able to attend to the summons, and thereafter the AO says that, look, the summons is not attended, so now the onus is on the SSE, whether that is required or not. That is first question. Thereafter, considering the nature of the business, one-to-one purchases and sales cannot be identified because the manufacturing, because of the manufacturing activity, the raw material gets into the furnace and the outputs are the ingots and the bars. Now, accounts of A Limited are covered under the tax audit, and the quantity flow is also given in Form 3CD. The stock records are available with A Limited. However, the independent third-party evidence regarding purchases being made from Khan cannot be available and produced to the AO because of the circumstances beyond his control. So what precautions should A Limited take while making submissions before AO so that minimum tax liability under income tax law is levied, if at all leviable? And why, if at all? Because A Limited has taken all the precautions and duly complied with the provisions of Income Tax Act. And if any adverse view is taken by the department against the SSE, whether entire purchases will be disallowed or only the GP element or the GP percentage, and if at all the GP percentage, what would be the basis of estimating the GP? And if an estimate is done at all, then whether further the penalty can be levied on the estimated amount of, on the basis of the estimate, whether the penalty provisions can be invoked. Yes.
Yeah, so I think the question on GP will take it up in probably in the next case study. Here, I think you see here. I think we are on a case study where all facts are admitted. Mr. Khan says that he has supplied. A Limited says that I have bought. There is no difference in the quantity. There is no difference in the amount. All those facts are admitted. So there is no inconsistency between these statements made by Mr. Khan, the supplier, and the A Limited, the SSE in this case. Now, considering that A Limited has indeed purchased, all that A Limited has to see is that it has proper stock records. It has, it will have, as Mr. Vaitisaran says, it's a foundry, and therefore it will have all sorts of evidences to show that the material had come. So therefore, all your transport details, all your goods, all your storage details, there will be entries in the raw material register. There will be, issues made by the stores to the foundry. So all the stock records, and in order to further prove the genuineness of the whole thing, whether the I agree that one-to-one is only possible in trading, but that does not mean that in manufacturing everything can be added. So long as your consumption of raw material and your production of finished goods meets with the normal standards of yield, I don't see there is any difficulty over there. And as the case study says, nobody is challenging the genuineness of the transaction. It is only because Mr. Khan, rightly or wrongly, is convicted, and he has probably wrongly claimed, allegedly wrongly claimed the ITC credit. That cannot be the reason whatsoever for the Indian tax department, direct tax department, to touch A Limited at all. According to me, it's a non-issue. It's not a direct tax issue at all. So long, as I said, in terms of precautions, yes, we'll have to produce all the necessary evidences of having received the stock, of having stored the stock, of having paid for it, of having issued it, used it, and sold the finished goods. So once that is done, because there's nobody's case that this is a bogus transaction, I don't see any direct tax implications whatsoever in this. If the party cannot be produced because he's in jail, that's the first thing that you write to the assessing officer. Having produced all your evidences, you say that despite that, if you want that person to be there, he is in so and so jail, you can go and summon him. Nobody will prevent. I mean, the tax department cannot be prevented from cross-examining a person who is sitting in jail somewhere. It's ultimately a government authority who wants to take some legal proceedings. They can go and summon him over. They can go and cross-examine him over there and take his statement. Yes, if for some reason at that time his statement is against me, then I will have a right to go there and cross-examine him. I don't see any difficulty in that. So that is the position according to me. There is no case, and merely because some ITC credit cannot be recovered from him, tax department does not have any locus standi whatsoever. There will be an issue on because it's a scrap sale. There will be some issue regarding TCS and TDS. I don't know whether Mr. Khan, having sold the scrap, he has done TCS under 206C or not. And if he has done TCS, fine. If he has not done TCS, ideally 194Q may get triggered. And I should have done a TDS over there. That's the only thing. But I don't. I mean, that's
the problem for Mr. Khan, right? Why? Because if A has used this scrap for the purpose of manufacturing activity, so TCS would not.
Right. Yeah, no. But then it's I am buying a goods on which probably TCS is not done. Then 194Q can come in.
Yeah. So we presume that A Limited has deducted the taxes on the purchases above rupees 50 lakhs. Yes, that we presume. Yeah.
So that is it. Otherwise, I don't see any tax issue in this account.
All right. I understand. So as far as the GB percentage and all that we take it in the subsequent questions. And as far as the source, what Rajiv Bhai and Vaiteshwaran sir said, that the question does not arise because it's not the case of section 68. It's the purchase case. So you don't have to go step down to prove any source of source.
Correct. Source issue is also relevant only for 68 and this question does not arise. Right. I think, so we have covered the questions. Yogesh has already answered to all the questions raised for relevant to this. That brings us to case study 3, Rajiv Bhai.
Yes, sir. Vaiti sir, now the third case study. There is a DGGI who is already carrying out and conducting investigation on B Limited in respect of the fake invoicing presumed. After recording the statement of respective director, etc., DGGI has issued a show cause notice in November 22. The dates are very important. November 22, they have issued show cause. And it was alleged that ITC in respect of certain parties was fraudulently availed by B Limited. And there are 4 parties they have given PQRS with amount. Now, thereafter, simultaneously, because GST dual tax, so state authorities have also initiated inquiry. But they have issued invoice in July itself, which is much before DGGI, because DGGI SCN came in November. Although their inquiry, their investigation started in May, but they took little extra time for whatever reason. And in the state authorities have issued invoice very fast in July. And there they have alleged that you will not be entitled for the ITC because two of the parties, Q and R, have those registration was already cancelled by the department. Now we have two show cause notice. In first show cause of DGGI, it says that the 4 ITCs were incorrect, fraudulently availed for the reason you have never received good services. Whereas the State Department says out of 4 to only for 2 parties show cause is given because the number is cancelled. Okay, so 2 parties are common, but the reason is different. Now, in that further process, the State Department has completed the adjudication also, and that they have upheld the demand as we know every time, and that has happened in April 23, and the order was uploaded on the portal. The B Limited was unaware because he has time to see mobile, not the portal, and that's why B authority was keeping quiet. One fine day, he got a notice for recovery. And at that point in time, he came to know, yes, there is a demand. So he thought of filing appeal. But by the time the appeal timeline, which is there for 3 months plus 1 month extension as per 107, is already expired. Now in that process, sir, he seeks your advice. First is, will SCN issued by DGGI, which is issued later on, and adjudication thereof is still pending as on today. The proceeding initiated by the State Department, the DGGI will override that, or it is vice versa. The person issuing show cause letter and passing order first, whereas the person who has started inquiry investigation first issued show cause letter and adjudication is pending. And secondly, the more important, whether 2 authorities can simultaneously carry out the investigation and ultimately reaching to the same point. Of course, in first case, there are 4 parties. In second case, there are 2 parties. But by and large, there is a common issue. And once you finish that, the second issue is just I am posing. The timeline for filing appeal has expired. Forget about that recent council decision and all. But otherwise, what is a way out once the timeline for condonation of 1 month, including that 3 months? So 4 months are over. These are the 2 questions, sir. Vaiti sir, I am done with the question.
Yeah, got it.
Sorry, my apologies, sir.
No worries. So fact is that the SCN issued by the state authorities was adjudicated. An order has been passed whereby the demand has been confirmed, and that order has also been uploaded in the portal on 30th April. And one key fact is that the assessee's jurisdiction for his case is with the state authorities. B has not gone on appeal. And then you also have an SCN issued by the central authority, DGGI. So will it override the proceeding by the State Department? Which should override, which should prevail, etc. So let's look at each aspect. First, let's look at the last aspect, which is the appeal. Now, the order has been uploaded on 30th April 2023. You have a very peculiar development that has happened post 52nd GST Council meeting. Of course, we need to see the actual notification which will come. But it's quite interesting that they say that they're going to introduce a special procedure under 148. Honestly, 148 does not give that power, but anyway, it's a benevolent decision, so we'll accept it as it is. So they're saying that for taxpayers who have not filed appeals under 107 against the order passed on or before 31/3, they're talking about appeal, and they are talking about an additional pre-deposit instead of 10%, you pay 12.5%, after which at least 2.5% must be out of your cash ledger. So it's very funny because all these things override the act. So instead of amending the act, you have a scheme which talks about an additional payout, etc. The legality of it is a separate topic, but definitely the scheme talks about appeal being filed. And in your facts, you have a peculiar problem because the order has been uploaded on 30th April 2023, whereas this scheme talks about orders passed on or before 31/3/23. So questions that would arise is whether there can be an amnesty scheme under 148 for an appeal. And can there be a provision when provisions of section 107, which talks about pre-deposit, can be given a go-by through a notification? And can pre-deposit be insisted only through cash when payment of ITC is also payment of tax as laid down by the Supreme Court? And what is the justification for a cutoff date of 31/3/23? We already remember that circular 183 that came for GSTR 2B3A It was confined to 1718 and 1819, and in a writ petition, the Karnataka High Court said you can extend it to 1920. So it's quite possible that these provisions will also be tested in courts to have a longer period beyond 30th April, the 31st March 2023. Now, coming to your fundamental question, this is faced by everybody, that my appeal time limit is 3 months, and unlike income tax, the indirect tax laws, especially it started with sales tax and then VAT, they started specifying an outer limit of condonation. That means the appellate authority has the power and the discretion to condone the delay if sufficient cause is shown, but his power is clipped in the sense that he cannot condone the delay beyond the period prescribed. Now, primary view would be that authority is a creature of statute. So the appellate authority's powers flow only from the section. Unlike the High Court under Article 226, where any kind of orders can be passed, an appellate authority sitting in an appeal is governed by the four corners of that particular section. And therefore, if that power is confined to a particular limit of only 1 month after the expiry of 3 months, then it would be difficult for the appellate authority to condone. And even if he condones, it will be questioned. It can be easily questioned. Now, as far as the decisions are concerned, the Supreme Court in GlaxoSmithKline did observe that you cannot, in Article 226, challenge the husband order on the ground that the statutory remedy of appeal stood foreclosed by the law of limitation. Though High Court has powers, very wide powers under Article 226, the legislative intent in terms of time limit cannot be disregarded, and therefore it would defeat the legislative intention, is what the views of the Supreme Court in GlaxoSmithKline. But having said that, there have been decisions from the Supreme Court even in the past and from the High Court, even after the decisions of the GlaxoSmithKline, when you have the latest decision of the Madras High Court, where they've said that, look, there have been other reasons why the assessee could not have filed the appeal in time. 3 months plus 1 is fine, but here is a case where business had collapsed, employees have left the company, and therefore there is justification. And so long as the High Court looks at justification, you cannot curtail the powers of the High Court under Article 226. So where they see gross injustice, they may always interfere. And they may put conditions. For example, they may say that you deposit an additional pre-deposit for your appeal to be admitted. Or they may say that we permit you to file the appeal provided you comply with the pre-deposit conditions. Or you give a bank guarantee for the entire amount and we'll permit you to file an appeal. Or you file an appeal and the appeal must be disposed of within a period of 1 month. All kinds of conditions could always be passed by the High Court under Article 226. So it is not a right which you can royally seek from the High Court. It's an indulgence you seek from the court. You have to demonstrate your position. You have to demonstrate why, what prevented you, what went wrong. And classic example is that you did not see it in the portal. Now, let's understand this a little bit more. Today's business is such that one of the modes of service of orders is the portal. If you look at the sequence of flow, the order can be given by post, the order can be given by registered post, the order can be given by hand delivery, and the order can be stuck on your premises. The order can also be given in the portal. So if different means are available, is portal the only method of putting the order is a question, which is a bigger question today, because people cannot spend 24/7 watching their portals. They can't keep on watching, whether an order has come or order has not come, etc. And there is no communication. If portal is matched by an email communication and matched by an SMS, probably you can say the department has exercised some degree of diligence in communicating it. Otherwise, that itself can be a ground to say that, look, I could not see the order because I was waiting for an order. And especially in cases, suppose the notice has come in writing, but the order has come in the portal, you even have a better case to expect the order in writing to come to you. So the writ option is definitely available. That is one part. Now coming to the jurisdiction part. Now B Limited falls under state jurisdiction. And the state has also issued a show cause notice on 15/7/22. DGGA has commenced investigation in May 2022. And DGGA has issued an SCN on 30/11/22. Simply speaking, it is multiplicity of proceedings. So while you have the CGST and the SGST for an intrastate supply, the Act also mandates, both the CGST Act as well as the SGST Act states that when an authority takes up matter for adjudication, he will levy both the taxes. It is not as if a state authority will issue a show cause notice only for SGST. It is not as if a central authority will issue a show cause notice only for CGST. When the show cause is coming from the CGST authority, he will issue for CGST and SGST together. Or if the show cause comes from the state authority, he will recover both the CGST and SGST together in the proceedings. Or if it is interstate, it will be an IGST. So can there be multiplicity of proceedings? And logically, the question is, what is the concept of cross empowerment? Now, you might have seen different decisions across the country saying that nothing wrong in a state authority summoning or a central authority summoning, even if it's under investigation, even if a show cause issued by one authority, nothing prevents the other authority from taking action, etc. In my humble view, most of these decisions have not addressed one particular point which is important, which I have raised in one matter before the Madras High Court. I have extensively argued this matter. I'm waiting for the judgment. What I've argued is this cross empowerment is a topic which was discussed before the GST Council. It had an agenda in the 22nd GST Council, and there were draft notifications which were placed before the GST Council. What was the draft notification? The draft notification was a CGST draft notification, SGST draft notification, and IGST draft notification, and UT-GST draft notification. What it said was, if a central authority has commenced investigation, etc., in terms of a tax, etc., the state authority ceases completely, and a 1-year time limit is given for the central authority to initiate further action in the form of a notice, etc. If after 1 year the central authority does not initiate any action, then the state authority has jurisdiction to initiate action. Similarly, there is a SGST draft notification which also talked about state authority initiating proceedings. He has 1 year time to start his proceedings and complete his proceedings into a notice. If he doesn't, the central authority steps in. Now, these draft notifications were debated but were never approved. They were never approved and cleared in the 22nd GST Council. The only notification that was cleared in the 22nd GST Council was a notification that talked about refund, where both center and state can apply. You can apply both to center or state for refund. And that is notification number 39/2017, which means as on date, there is no notification as on date of cross empowerment, which means if you are falling in state jurisdiction, only the state jurisdiction authority has got a right to issue a show cause notice. Or if you're falling on central jurisdiction, only the central authority has got the right to issue a show cause notice or proceed further. This cross empowerment as a discussion did not materialize further into notification. So that's a key important point, which is not considered in any of the decisions that you can see as on date, which is reported. Hopefully, we'll see some clarity when the Madras High Court ultimately decides. They may take a view this way or that way, but this point has been argued. And fundamentally, should an assessee be hit from multiple authorities? You have the decision of the AP High Court in Balaji Rice saying that if plurality of officers are invested the powers of assessing the same dealer, it will result in chaos and great hardship. Now, let's imagine a situation where, in your case, PQRS, 2 items have been taken up by the state and 4 items have been taken up by the center. Which will be correct? So let us say center takes up a particular issue and says this is taxable, and state takes up the same issue and says this is exempt. So which will prevail? So where would you go on appeal? Which would you contest? Will assessee go on appeal against the first order and the department go on appeal against the second order? So what are we looking at? And are we talking about multiple appellate proceedings also? So one should take it to a logical conclusion, test it. If you say multiple authorities can issue show cause notice, what happens if there are multiple orders? If there are multiple orders, what happens? That is how you need to look at and then say, one of you has the power. It has to be a clean mandate that has to flow from the legislation. And the legislation also in terms of section 161 and 62 talks about notifications to be issued. As on date, there is no such notification issued in the context of cross empowerment. And of course, you can always rely upon the decision of the Supreme Court in the case of Canon. Whether DGGI is a proper officer can be a question, because the power to issue a show cause notice flows from that section 73 or 74, where they used this proper officer. This language is similar to section 28 of the Customs Act, where the Supreme Court had held that DRI and other authorities are not proper officers, etc. Customs Act has been amended, and this decision has been nullified in the context of Customs Act, but no such amendments have taken place in other legislations. Therefore, canon judgment can also be extended to argue that 74 would not cover a DGGI because the proper officer is not contemplated as a DGGI. Of course, there are notifications which the department would rely upon, but you'll have to test it in the context of how canon has dealt with it and how Supreme Court has observed, how it has made certain observations, which has got a huge impact.
Fine. Vaiti sir, one or two quick issue in this. The first, in our example, the investigation was started by DGGI first, but the show cause came first from state, and jurisdiction was from state, I agree. Now, one point is concerned, you have given that Madras High Court, your issue, as well as the council, which has never materialized by way of notification, fine. Now, can we say that when DGGI issued the show cause notice, the larger period cannot be invoked because entire detail was available with the department, and department is a GST department. Based on that, they have issued a show cause, although state on 15 July. so while issuing the second show cause notice, although by a different authority, the larger period cannot be invoked.
That can always be there because the period of limitation, extended period contemplates suppression. And if, for example, during investigation by DGGI, the first thing the assessee should have told and rightfully should have said is that there is some other proceedings launched by some other authority. And even otherwise, that would be part of the record. And if it has been posted in the portal, then it is part of public domain. Therefore, you cannot deny the existence of that.
Correct. The second alternative, when I'm defending that show cause at DGGI, can I say one more thing? Of course, this larger period, apart from that, I say there is an allegation by the state in show cause, and only two party was alleged, and it was on a different ground. And the ground taken in your case that I have fraudulently availed the this thing without a delivery, etc. You cannot take a two separate allegation for same party and same aspect of income tax. Can that be also a ground of defense in second show cause?
It can be ground because it can be a good ground because the entire CGST Act and SGST Act is identical in every aspect.
Correct.
Every aspect of CGST and SGST is worded identically. Therefore, what is taxed is the same in both. What is exempt is same in the both. What is the requirement of registration ITC is same in both the legislations. Therefore, it is not possible to take different positions in respect of something which is identical in all aspects.
Okay. And the last is where as and when the adjudication happens, we take multiple defense ground, fine. One more ground while replying, because adjudication of DGGI is still pending, saying that there was already show cause, which was demand is upheld for these two parties for which appeal etc. is going on. So at least you need not have to consider these Q and R for which already separate proceeding, of course, on a difference ground, that's fine. But the amount is same, party is same, everything. So at least to that extent, the demand cannot be upheld.
That is some kind of a via media approach to say that, two items have already been considered by another authority. You can confine your proceedings with the other issues. That can also be a difference, but then that would concede that both have jurisdiction in respect of the matter. So you should be careful in how you contend your matter.
Okay. Thank you very much, sir. Mahendra bhai, I don't foresee any issue in income tax from your side.
I have for Yogesh bhai, because these are certain consequences. Yeah, first of all, Yogesh bhai, the impact on the assessment, if carried out, there could be in two ways to look at it. First, if it is a service bill, and as the fact says no service is rendered, then what are the consequences? And supposing if it is an invoice of goods for purchases, whether it will be held as a bogus purchase or a bogus party, and the consequences thereon. And if the consequences, while dealing with the consequences, whether my earlier question which we have raised and which we were to answer, so we can answer now, whether the entire purchases will be disallowed, assuming he's maintaining stock records, day-to-day stock records, or assuming he's not maintaining day-to-day stock records, and only the GP percentage will be considered for the addition purpose. That is my first part of the question. The second part I understand is regarding the condonation of delay and all that, what Vaiteshwaran Saab has already dealt for the GST law. I don't see for income tax as such there are many issues for the condonation of delay wherever there are genuine delay in filing the appeal. But however, if you feel like that, yes, there could be something, then you can always enlighten the delegates over here. And fortunately, for the income tax purpose, we have one country, one law for the direct tax, and we don't have like GST and UGST and the state separately. So it's before you, Yogeshwar.
Yeah. Okay, so now what are the admitted facts? See, from the income tax point of view, we'll have to see whether critical thing is whether do we fall under any of these those tainted sections, 68, 69 group of sections, do we fall under that? Because then the implications are completely different. Now, if it is a service bill, you said, so you said that I should examine whether it's service bill and and goods bill. Okay, so if it's a service bill and services are not rendered, and everyone agrees that services are not rendered, the vendor agrees that not rendered, I also somewhere in the statement say this is a bogus bill. So what are the consequences over there? So we are on these admitted facts that the vendor and the purchaser of service both are on that, both are accepting that this is only an accommodation entry. In other words, B Limited has paid for it and received that cash. Okay, if that is the position. So then what happens? Then first of all, let's examine whether this will fall under any of these sections 68 and 69 group of sections. 68 says if any amount is credited, so unexplained cash credit. So there is no cash credit over here. 68 per se cannot apply. 69 talks about when I have made an investment which is not recorded in the books of account. So 69 also will not apply here. 69A says that when the SSC is found to be the owner of money, bullion, jewelry, have they found money with me? So if I have paid check to this person and that money is found with me, I can understand that 69A will apply. But if that is not the case, there is no money found with me. Okay, it is just an inference that okay, that there is a bogus invoice purchase. Would 69A apply to it? I don't think that 69A would apply to it. 69B, SSC has made investment which is more than the amount recorded in the books of account. Once again, not applicable. 69C, I have not established the source of purchase, which is I have not established the source of purchase. Now I have paid check. The source of that check payment is established because that is there somewhere in my books, out of my loan, out of my income, whatever it is there. So that source is getting established. 69C does not. 69D applies to hundi, that also does not apply. So these group of sections, interestingly, does not apply to this transaction so far as it relates to Mr. B. And therefore, your rigors of 60% tax in 115 BB does not come in over here. Right? Now, that being the position, what are the consequences? The consequence is that this is an invoice which is a bogus invoice in the sense that you have paid for it and you have received back cash. That's the inference. Or that is an expense which is not for the purpose of your business. So it is not to be allowed to you, as simple as that. And that disallowance will happen if it is a service bill. That disallowance will happen for the entire amount. And that according to me is the end of the story. Yes, penal consequences under 271(1)(c), 270 capital A, depending upon which year it is, will come in. 271(a)(d) cannot come in because it doesn't fall under any of these sections 68, 69, etc. It doesn't fall in that. So therefore, sorry. I'm sorry. It says that it's a fake invoice. Yeah, I mean, it will be applicable because you have given an invoice. It doesn't talk of 68, 69. It says that you have given an invoice without giving the service. You have given an invoice without giving the service. Therefore, AAD will come in if it is relating to the years, current years. All right, after 1st April 20. So that is the implication so far as this company is concerned. If it's a service invoice. If it's a goods invoice, interesting issues would arise. You have those bogus purchases cases, and you have this Bombay High Court decision in that Muhammad Haji Adam 103 taxman.com 459, where everybody admitted, CIT Appeals Tribunal, everybody admitted that this invoice is bogus, this purchase is bogus. However, the sales was accepted by the department. So the sales having been accepted, they said that there will have to be some purchase. And therefore, if at all there is an addition which is permissible, that addition can only be to the extent of the GP difference. So what is your normal GP in these type of transactions? That normal GP can be added. That is what the Bombay High Court held in this particular case, which was decided in 2019. That is the legal position if one has to argue this matter and take it forward. Now, there are I mean, I have always entertained a doubt on this issue that if you analyze the transaction, what it looks like, that when you say that there is a purchase, but that bill is accepted as bogus, but then I have sold it, so department has accepted the sale, so therefore some purchase is going to be there. So what is the situation? Situation is that I purchased from Mr. X, and Mr. X, I paid in cash. I took the bill from Mr. Y, I paid check to Y, and he gave me cash. Right? That is the long and short of this transaction in the real life business. So what happens is, I mean, I have always been wondering why this issue has never come up in any of the decisions or in any of the analysis so far by the courts, that I have paid check to Mr. Y and I have received that cash. That cash is my income. It doesn't fall under any of these 68, 69, but it is my income because I received that. That cash, so therefore the payment of check and the cash sets off against each other. Now there is a sale which is to be taxed. Against that you will say that I have purchased from somebody or the other, so you give that also set off to me. So ultimately what you add to me is only GP. However, the difficulty here is that if you admit of having purchased from X in cash, then you can't be allowed set off of that if the payment is more than 10,000 rupees, and therefore 40A3 would come in. So that is an issue which I have not found to have been discussed in any of the decisions. However, at the same time, the onus of proving that you have paid more than 10,000 rupees in a day to a person, that onus will be on the department, because the SSC will always say that I have paid less than 10,000 rupees in a day. And therefore he will probably try to come out of the rigors of 40A3. And how will the department prove that you have paid more than 10,000 rupees at a time is also an issue. Then he is not going, I mean, the department doesn't have any chitti or any receipt of cash being exchanged. So practically it will be difficult, but the issue is a live issue, that whether in a case like this only GP addition can be made as held by Bombay High Court. Bombay High Court doesn't discuss 40A3 issue here at all. And therefore simplistically to say that only GP addition can be made and nothing else in a case where 40A3 is invoked, there'll be new challenges to argue these matters. So that is what I think will summarize this case study from my point of view.
Can you just touch upon the penalty issues, if at all the GP addition is made, and estimates in context to both, whether it is for concealment of income or unreported, and vis-a-vis the provisions of section 271 AAD, that too on both the ends, purchases as well as on the sales, saying that both possibly would be, or at least on the purchases, the entire purchases would be false entry.
So on estimated additions, concealment cannot be made. There are case laws on that. So 271 1C, to my mind, you have a good case to say that it cannot be labeled. Now, so far as 270 capital AA, 271, 270 capital A is concerned, you have so here there will be a difference between the amount that is ultimately assessed and the amount that you have returned, and therefore to that extent 270A underreporting penalty can be invoked. So 270A would lie. 271 AAD, if we 271 AAD will also lie, because this is an invoice for which no service or no goods have been delivered. 271 capital, 271 1C, if there is only GP addition, cannot.
Okay.
Because that's an estimated addition.
Right. But for underreporting, you mean to say even if it is there is no scope, according to you, there is no scope to say even if it is an estimate and done, in that case also the provisions of capital 270 underreporting would come?
You will have to show that you are for, see the immunity in subsection 6.
Yeah.
Goes away when you talk about, when you look at subsection 9, which talks of misrepresentation and suppression of facts. So that is the trouble that I have in this.
But subsection 6, which says the underreporting income for the purposes shall not include. So
Correct.
would it not fall into any of them that it should not include, because it would not be automatic? What I'm trying to say is.
No, agree. But will that subsection 6 immunity apply when it is a case of misreporting? And misreporting would really mean misrepresentation and suppression of facts.
Okay.
That's it.
I got it.
That's the trouble that I have.
Yes. And according to you, even the provisions of section 40A3 will be invoked by the assessing officer.
Can be invoked. According to me, can.
Okay.
I mean, can be invoked. But as I said, it will have to be tested. Onus is on the department to prove that I have paid less than 10,000. If I make a statement that I have paid less than 10,000, then how will they prove that I have paid more than 10,000 is a question.
Right.
Because it says payment in respect of an expenditure,
Yes.
which is paid exceeding 10,000.
Yeah. Thank you, Yogesh. Yeah, that brings us to case study 4, and little bit we will have to hurry up because there are 2 case studies on the income tax side. We do not have much, but yes, definitely there are something important which will come out from Yogesh Bhai nevertheless.
Yeah.
Please.
Yeah, so I'll take on to case study number 4. Just for info, Vaiti sir, all these are actually live case studies. Only the names and figures have changed. These are the actual notices the parties have got and accordingly being compiled. In the 4th case studies, there is an innocent who is a dealer in toys, a small dealer. And normally for small dealer, the accountant consultant is one and the same. They only write the account and they only upload. And the small dealer, he is that type of person, doesn't understand more than the portal, etc. And he was honestly doing the business. His accountant is scrupulous. And what he has done, accountant has taken separate registration for separate vertical for his concern without his knowledge. Now, digital, etc., he may have access and all. And from that separate vertical, 2 crore rupees worth invoices have been raised by that accountant in the name of this innocent. And for that, the credit ITC was passed on. And before any action is taken, he was absconding. Now the question comes, department has investigated innocent. And thereafter, innocent says, I am completely unaware about such additional registration, etc. Plus, I am never issued these invoices, nothing. So all this has been, he stated during the statement and investigation. The question here is, the tax liability of 36 lakhs rupees on this 2 crore rupees turnover in the additional vertical of the sale invoice. Department is trying to recover because this 2 crore is already declared in GSTR 1, but not paid in 3B. So liability has remained unpaid. That's first question. The interest is consequential. The penalty 122 2B about the tax being recovered without supply of goods, etc. And thereafter income tax we'll see, but these are the main issue. Honestly speaking, this person is innocent actually, but the facts are not in his favor. How to deal and what is the consequence?
See, this is like your, CA final, where your compulsory question will give some leading information in the question itself. So you put your word innocent as a name of the assessee.
Yeah.
On the presumption that, the decision should go in his favor because his name is innocent and his facts are, going against him. So fundamentally, the dealer is not aware of the activities of the consultant. Consultant has committed a fraud, which is unfortunate, and all kinds of action should be contemplated. Issue of invoice without underlying supply, consultant disappears and show cause is issued to dealer. And of course, the first thing is, we are clear, the allegation also is to the effect that the consultant has misused and mined the registration of the particular assessee and issued certain invoices without an underlying supply.
Correct.
If that is given facts and it is also alleged that there is no underlying supply in the transaction, then there is no question of recovering the tax from the assessee, because when the revenue itself says that there is no question of tax, then that circular would come into play, and they say that there is no question of tax that can be recovered. Second is, innocent can also initiate separate proceedings to find out whether the revenue has taken action against people who had availed ITC based on that so-called invoice without an underlying supply. And if that action has been taken by the revenue to recover the ITC from those recipients, then you can probably contend that you, having achieved what you have to achieve in terms of the SOP and the circular, there is no necessity for you to proceed against me to collect this tax because there is no supply and ITC is what is the issue involved. But primarily, it is a very important question from the assessee's perspective. Today, many assessees are committing this mistake, and while trust is important, one cannot underscore the importance of a trust. You trust your lawyer, you trust your accountant, you trust your chartered accountant, you trust your consultant, you trust your doctor. So the element of trust is very, very critical. Then the same responsibility shifts to the consultant or the professional, because he cannot go against the trust that has been reposed on him by the assessee. But here is a case where somebody has taken advantage. So fundamentally, KYC should come into picture. KYC is now know your consultant. So you should know your consultant before you completely give your user ID and password and completely be with it. It's also a good lesson for assessees to also have an eye as to what your consultant is filing. You just cannot blindly let him file. He knows the subject. It's better that you have an eye on what's happening and also test it, etc. And you should also demonstrate your bona fide by making necessary complaints. For example, if the consultant forms part of an organization where a complaint can be maintained, you should take action to initiate complaint. That will prove your bona fides to say that you're a victim rather than anything else. And you can always argue that a fundamental legal principle that fraud vitiates everything. So I am a victim of fraud rather than a person who perpetrated the fraud. I'm not the co-conspirator. I'm not the conspirator. I'm the victim of this particular fraud. And of course, there is a decision of the income tax Hyderabad bench tribunal in the case of Venkatraman Anupa, one report in 151taxman.com, where the CA with the connivance of the partners prepared fake documents to support the ITR, which was uploaded without the knowledge of the assessee. It prima facie creates doubts as to whether there is any income in the hands of the assessee. ICA is the professional body competent to deal with complaints against so-and-so. Due regard has to be given to the findings of this professional body. Bench of the ITAD held that criminal case is pending against the perpetrators of fraud, and the findings of the criminal code will clinch the matter. Fraud vitiates everything. I have the opinion that it would not be the interest of justice to direct the assessee to pay the tax on account of the fraud played against him. So I'm sure Yogesh will have much more decisions to add than what this is, but this is something which you can rely upon to say that innocent should not become a victim, and innocent should not be fastened with liability.
Thank you, Vaiti sir. Mahendra bhai.
I think Yogesh bhai, Vitesh sir has already mentioned few of the precautions what one should take to prove his innocence, not only for the CA final exam, but in his real life also. If you have anything to add or to support this, which would help to the delegates for taking precaution.
Yeah, so quickly, in the sense, if the gentleman is really innocent, then I think he will have to take all sorts of action, in the sense that he should ideally file a FIR. If he is absconding, his power of attorney should be withdrawn. He should give public public notice. In this behalf, he should issue legal notice to that person. He should pass resolution in all his companies that not to appoint this man as a consultant anymore, and do all activities to show that I have completely stopped the relationship with that man. I'm out to sue him, issue legal notice to him, and raise all sorts of demands on him, and raise all sorts of, because ultimately whatever will be recovered from him by the tax department, whether it be GST department, whether it be tax department, everything will have to be recovered from him, because he has breach of trust, or breach. I mean, that is that is the provision, or that breach of trust or breach of my contract is something which you will have to invoke to recover all your dues from him, with interest, without interest, whatever it is, all damages. So all the actions will have to be shown to have been taken. Then if your tax departments take a lenient view, you are lucky. If the tax department doesn't take a lenient view, then you are in a trouble. And I would say that even your AAD, which talks about false entry, these false, generally speaking, false entry, I would have thought that false really means intentionally untrue. False essentially means something which is intentionally untrue. Now here there is no intention, okay, and therefore I can probably try and defend that AAD nahi lagna chahiye. However, the definition seems to have expanded the scope. In an inclusive definition, they have said that it will also include invoice in respect of which supply or receipt of goods, supply or receipt has not been made. So to an extent, they have gone beyond just the word false. And that creates a bit of difficulty. Of course, there you can argue based on NS Getty Chettiar that the inclusive definition does not take away its ordinary meaning. But I think if the intention is to expand the definition beyond the word false by having an inclusive definition, then you are in a big trouble over there. So yes, while one will have to take care that all the you don't give passwords, etc., do your KYC, etc. But then having done all these things also, if there is a problem, then I think you to intimate. And I think the first thing I would do is to write to the tax department that look, this thing has happened. And I'm taking all actions against this man, and I'm telling you that this has happened. And I don't know, I will carry out some forensic audit, or I'll carry out some audit to find out what is the extent of damage this man has done to me. But while that exercise is being done, I'm informing you. Go and upfront tell him. So that will ultimately that may go in your favor at the end of the day. Some court taking a lenient view that you are really innocent.
Right. So I think, sir, just to add one more, that if your consultant happens to be a chartered accountant, then one can write to the institute also. Or if happens to be a lawyer, then one can write to the bar also, that this is what has happened with me. So I think that just to give a support as one by one, just to add on. Right.
I fully agree. Yeah, I fully agree.
Right. Yes. That brings us to, I think, case study 5, Rajiv bhai.
Yeah. I'll quickly take the 5th case study. There are 2 dealers of iron and steel, Mastan and the Jannat Enterprise. It was for financial year 17-18. There was a transaction of purchase by Mastan from Jannat. Thereafter, the transaction went well in all respect, and the payment, etc., returns, everything is perfect. In 2020, Jannat has closed down his business, voluntarily cancelled the number. DGG has issued the summons to Mastan asking for various details, including that of Jannat, regarding the purchase invoice, then mode of delivery, etc., to substantiate the transaction, whether it is genuine or no. And during this protest, DGG has insisted that we want written confirmation and personal presence of your vendor Jannat or representative of Jannat. The Mastan said that he has got all the evidence regarding purchase of goods, documents are there, but Jannat has closed down the business in 2020 and he is no more in touch with that, and it is the records and as well as the income tax GST portal, all transaction is appearing in 2B portal, etc., everywhere. So supporting evidence there, but we can't produce. The question here arises, there is a section 155 in the CGST Act, which says that the DGG has issued the summons stating that Mastan have not been, the transaction was not proved beyond doubt as a genuine, since the vendor and the confirmation was not submitted, the vendor was not produced. Now, burden of proof we are talking about, and how to take it when it comes to section 155 of the GST specific transaction for this. Consequence on the income tax, how it will work, Mahendra Bhai Vilas.
See, this is a fair last question, therefore not that much of a complex issue. See, of course, your ITC claim is what is being questioned, and the facts indicate that the goods have been purchased in 17-18.
Yes.
So let's understand the law as it existed in 1718. In 1718, the law was in a flux. You didn't
Yes.
have GSTR2, you didn't have GSTR3, you didn't have a portal which told you whether somebody has filed returns and whether it is available as ITC. You did not have the concept of e-way bill. There was no requirement or a mandate to produce an e-way bill. If that be the case, the degree of proof that was required in terms of transportation cannot be insisted upon for 1780.
Okay.
Post e-way bill, yes, somebody can check whether goods have been delivered and all those things is possible as to demonstrate delivery. But beyond that, to ask in 1718, it is not correct because e-way bill itself did not exist at that point of time. And second is you have this additional fact that your vendor is now absconding. He's close, and why he is absconding? It is not a case of where he has issued some invoices which without an underlying supply. His business collapsed. He's folded his business and he's disappeared. One cannot insist that one should continue business forever for the sake of department to verify. So if somebody has closed his business, that is it. I have evidence that I bought it, and when I bought it, his number was alive. Your portal indicated that he was filing all his returns, etc. And the fact remained that he closed his business after 2 years of what I've purchased. And therefore, now you're taking up the assessment. I cannot be called upon to do what is impossible under law. Therefore, doctrine of impossibility will squarely apply here. You can rely on this judgment or any other judgment on doctrine of impossibility saying that you cannot compel me to do the impossible of producing somebody who is not in existence or make him restart his business and produce those transport records, etc. for the purpose of proving that no goods were actually transported.
So, Vaiti sir, only thing, 155 section, how to read is the only question in this. If I read for a minute, 155 is only 2 lines, wherein burden of proof, that is what the heading, where any person claims that he is eligible for ITC under this act, the burden of proving such claim shall lie upon us. Now, how far we can stretch the burden of proof as a vendor, prudent vendor? I have all the documentary evidence, goods, delivery challenge, what all documents require, records, as well as the portal to the extent it is available. It is not necessary that I know each and every vendor. And if I have done some transaction with some vendor in 1718, you are asking me in 2022, I may not be having relations with that person. Secondly, this person has not been absconded. Actually, he has closed down the business. Maybe for what reason is not known to you, and there may be many vendors. So can department, I appreciate what you have said, you have tried to. So burden of proof beyond one limit cannot be extended. That is what you are trying to state. 155 has to be understood in a logical way that something which is possible, impossible to perform cannot be insisted from the vendor.
That is correct. And additionally, one other point which you can take, not only for this case or for any other case, which involves probably 1718 and 1819 or even 1920 to that matter, that the entire CGST Act should be seen as a whole piece of legislation. Yes. With all of them are connected blood vessels. So one cannot read 155 and 16.2 in isolation. One has to read everything holistically, which means when the law was created, it envisaged a complete codified mechanism of tracking through returns, whereby a seller would upload his selling data, which would be seen by the purchaser as purchasing data. And the purchaser has to verify it and accept it and say, okay. And then he will also file what is called as a GSTR2. And then ultimately there was a GSTR3. Yes. So when all these things was envisaged in the legislation to play, GSTR1, GSTR2, GSTR2A, GSTR1A, GSTR3 was envisaged, then the burden of proof had some kind of relevance. But once the system collapsed and GSTR2 was given a go-by, and GSTR3 was given a go-by, and there was no mechanism for the purchaser to verify. Even now, how does the purchaser verify that the supplier has paid the tax? All he can show is that there is a GSTR3B that is filed. You don't know the exact quantum of the tax that is covered by the invoice. So you cannot be compelled to do something impossible when holistically, if you look at all those provisions, most of them have collapsed. So you cannot rely on only one part and say you have violated.
Correct. Thank you very much. Mahendra bhai, you to take over. But one more thing, Mahendra bhai, in the chat box, there are 1 or 2 questions on income tax front, which you can, if you want, you can take it.
Before that, I think for this questions, we have covered Yogesh bhai in the earlier questions what we had. So we have covered more or less all the questions, all related to this question in the earlier case study. Now, as far as the chat box question is concerned, it's already 8:05. I don't know, rapidly we will just try to connect. The first one is regarding the technical session, the action challenge by the sector side. It is related to the GST. Thereafter, can burden of proof be imposed under section 150 again related to GST? So I don't think so. There is anything related.
Mahendra bhai, just go one step above that 271 AAD.
Yeah, 271 the false entry and omission of any entry which is relevant. I think, yeah, he has already, Yogesh bhai has already dealt with this.
Okay.
That omission of the entry relevant for computation of income.
I think all questions have been addressed.
Yes, they have been addressed. So I don't think so there is anything more with these words. First of all, my special personal thanks to both of them. As far as Veteshwar sir goes, let me tell you that I am not at all good into the GST, but definitely something really interesting I have learned as far as the GST law is concerned.
Thank you, sir.
And as far as Yogesh bhai goes, so definitely many more things which he keeps on educating us time and again to me as well as to the participants. And definitely understanding that I would not be given a chance to thank, so I'm just taking this liberty to thank the organizers for giving me an opportunity to moderate this session. Thank you once again.
I join in thanking both the faculties. I hope the questions were interesting. It was drafted by all our team members, try to give, and all of them are live case studies. And both the luminaries have, to the best of this thing, I'm sure the language, the way with the examples they have explained, I'm sure many more clarification we got it how to tackle with. Obviously, every question will be fact-based, but still a lot of clarification for both of you. So thank you very much to you. Over to Ashok Sharma ji.
Thank you, Yogesh. Thank you, Rajiv and Mahendra bhai. Friends, when I said in the beginning, there was no exaggeration of the fact when I said that our panel speakers are genius, which you have witnessed from the depth of their knowledge which they have shared with us. Friends, there are certain requests from the participant that whether PPT will be shared. Veteshwaran has agreed that the PPT can be shared. We will mail it, and we also put on our website, Taxman's website, as well as our chamber's website. With this, I request Chirag to propose a very well-deserved vote of thanks.
Thank you, Sharmaji. I would firstly like to congratulate both CTC and Taxman for successfully delivering such an epic session. The conceptualization and the execution of the same in such a flawless manner is something to surely be cherished about. I am sure we couldn't have a better set of professionals who would have done enough justice to such a vibrant topic. The technical discussion done over the case studies by giving a threadbare analysis has bestowed upon the participants a tremendous learning. I am certain that all the participants would have gained enormous knowledge from the wisdom of the panelists and the moderators. I, on behalf of CTC and Taxman, would like to tender a well-deserved vote of thanks to the panelist speakers and the moderators for their time and efforts devoted to this session. I would also like to thank Taxman for the seamless platform and the executions of this session. Wishing all the participants a very happy Navratri. Thank you. Thanks a lot, everyone.
Thank you. Happy Navratri.
Thank you, Yogesh ji. Thank you, Vaiti sir, always.
Thank you, Rajiv. Thank you.
It was
Thank
always
you.
pleasure interacting with you and sharing the dais. Thank you.
Thanks for sharing. It's always a pleasure to be a panelist along with Yogesh.
Yeah.
Thank you, sir. Thank you.
Thank you.
Thank you,
sir.
We are signing off, sir.
Yes.